Hello everyone, this video I'm going to go into a bit more detail of the backtest results for this year that I've done with the trend trading system. Okay, so I did two sets of backtests, and I'll go over the figures in a minute, but they're in an earlier post there. Okay, so I just want to explain what I was doing. Let me find an example where it gets some losing trades. Okay, here we go. So I did a conservative and an aggressive approach. I'm not going to talk about the trend direction filter at the moment, because I promise you what you pick for that is not the element that's going to make the difference at the end of the day. It's well, one of the things is how the market moves, a part that you've got no control over, and the other elements are how you manage the trades, and to a lesser extent the entry system and the trade frequency. Okay, so the conservative one, our trend has said we're down short for the day. Okay, we wait for London to open, and this is our first trade short here. Okay, and now we hold that trade until it goes to our TP at 4-to-1 risk to reward, or it stops out. Okay, and as you can see, just came back and stopped out. So now this has stopped out, then we look for our next trade again. Here's our next trade. This one goes down and TPs. So this one gets 4-to-1. And from the point it TPs, then you can look for trades again. Okay, here was our next trade, and then we go through into the next day. And if you're still holding a trade this day, then disregard it. Next day you look for your trend direction, and then you start trading again. So it was long now. This was your first trade long. It goes up here, and let's say it TPs here. So then you look for another trade. Okay, so this is a conservative approach. You're just trading until you get a trade that survives or stops out. When either of that happens, then you continue to trade. When you get to the end of the day, then you check your trend direction and you start the process again. Okay, so very systematic, and that was the first back test that I ran. Okay, now let's do the second one. Now the more aggressive approach was this. Now trend is long for this day, so we're looking for longs. Here is our first trade long. Okay, now rather than just waiting for this to TP or to stop out, whenever price makes a move away from that, okay, and then pulls back, then we can look to add another trade. So let's say we add a second trade here that stops out instantly. This one hasn't TP'd or stopped out yet, so it's still running. And then we get another trade here which triggers and stays alive. And then price moves from that level again, and we get another trade that survives. Okay, and in this instance, all three of those, I think definitely two of them. Let's have a look. Yeah, I think all three of those went to TP. Okay, so you see with this version, it's much more aggressive in the stacking, and your gut instinct is to tell you that the more aggressive one, because let's be honest, when you're doing the conservative one, okay, what you're doing is when the trend is long, you're trying to find, by a matter of elimination if you like, the lowest swing point of the day. Okay, and once you've found that, you pretty much stop. Okay, and you want to find the lowest swing point of the day, because that has the greatest chance of reaching your TP. Okay, and when you start to stack your trades, you'll find that you're taking trades towards the high of the day and the midpoint of the day as well, and these trades stand a much greater chance of being stopped out on a retrace, even if you've got the direction right. So you are going to take more losses, and your win rate is likely to be lower. But because of the nature of the system, you could take the low of the day trade here, and it might be quite a large bar, and you could take this long here, which is right near the high of the day, which happens to be a small bar, and this one could TP, and this one could eventually stop out. Okay, so location on its own is not an edge either. It's the size of the candle and how price moves. If this pulled back a little bit more before it went on, then this could have been a loss. Okay, so all you're doing really is you're increasing trade frequency with this. Okay, so that's the two tests I've done, and if we just pull up the results I got, so here are the two lists of results for this year so far. The first column on the left is the conservative approach, and the second column here is with adding trades at new levels. And as you can see, although the conservative approach had 217 R for the year so far, which is pretty amazing results, it's got to be said, for an almost mechanical system. Almost 100% no discretion is amazing results. And then you can see the much more aggressive one consistently made money. There was the odd month like July where we dropped 32 R on the conservative approach, and I think there was one other, May, just dropped by 2 R. But other than that, it was consistently better, and in a lot of instances, here and here, it was nearly double the risk to reward. Okay, so what is going on there is, this is August, is when you do get a month that has a few moves like this. I think there was 2 or 3 in August where you get 2 or 3 days consecutively down. With the aggressive approach, you can get these couple of stacks in here stopped out. You can get these nice stacks of runs, 4 or 5 winners. I mean, you could have even been mega aggressive and stacked another entry there. You get these 4 or 5 winners on the trot, which gets you 20 R. Okay, where if you were more conservative, then you might have only got a single win on each day. Now, I'm not going to go out there and say one is the right way to trade, because obviously when you're being more aggressive, if you have a particularly bad month with regards to market movements, obviously your risk is increased because you're increasing your trade frequency. So yeah, I just wanted to make that kind of clear. The trend indicator is probably the least important element. You're probably best just to find something you feel happy with. If you test it and it works, then stick with that and stick with it religiously. Try not to add too much discretion into that element. You're much better off to have like a light switch either on or off, so it's long or short. Okay, I mean, you can add in there an unsure one, and when it's unsure, you've got two options. You can stop trading until it becomes sure, or you can do like my high-low system and just trade the longs and the shorts for the day. Okay, so that's the trend direction thing. The entry thing, I don't think you'll find a better one. Wait for price to turn in the direction you want to trade and take the trade. If you're going to go down the wormhole of looking at individual bars and from that being able to predict whether it's going to go to 4 to 1 or not, well, the easy test to do with that is run through a period with reading the individual bar. Okay, then run through the period using my entry, okay, and see which one generates the greatest returns. Okay, and have a look at the winning bars and compare them with my using my entry system, and see if there is any significant similarities with winning bars. And you'll see that there won't be. They'll all be very different. Some will be small, some will be large, some will have long wicks, some will have big bodies, some will have small bodies. If the individual bar should make a difference, then you should notice a pattern forming there with the winning bars. If you don't, it's telling you a lot. Okay, believe that or not, it's up to you. So that's it. And then the exit. The exit has an edge because your winners are much bigger than your losers. As simple as that. So hard and fast 4 to 1 is almost guaranteed not to be the best. Some sort of trailing stop loss would be the best. But what it does do is it ensures that you let your winners run. Okay, and when you're making 4 times as much on your winners as your losers, you need a really small win rate. You need 2 out of 10 to break even. Even in the worst non-trending period, you're going to grab 1 or 2 with spikes. Okay, if you get 3 or 4, out of 10 that are winners, then you start to get into the levels of making really good returns because your trade frequency is high. You're going to do 10 or 20 trades, 10 to 20 trades a week, I imagine. So over a month, 30 to 40 trades. If you're winning 3 or 4 out of every 10 trades, then you're making really big returns. And that's why the returns in the tests that I run are really impressive, because it's an aggressive trend trading system. Or you could even say it's not a trend trading system. It's an aggressive high risk to reward system. And if you risk 2% on each trade, then you can make really large returns with this. But obviously do your own testing. I've just tested EJ and GU at the moment, and so it'd be interesting to have a look at your results and see if you come to the same conclusions. So that's it. I just wanted to cover those backtesting things, and I will do another video soon. Leave me some comments.